Hello and good afternoon. Welcome. We hope that you are well and thank you for joining us today for this webinar on Kuya Silver. My name is Jacob Willoughby and I'm a Vice President of Research and Analyst at RedCloud Securities Incorporated. Joining me remotely today is David Stein, President and CEO of Kuya Silver. Today we'll begin the webinar with a presentation on the company by David, followed by a question and answer period. As a reminder, you can type in your questions at any time and we'll try and get through as many as we can. But before we begin, I'd like to note that there may be some forward-looking statements made on this webinar, and I would direct listeners to the cautionary notes on page 2 of Kuya Silver's corporate presentation located on their website. For RedCloud Securities Incorporated, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. Also, we know that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Company-specific disclosures for RedCloud are the following. In the last 12 months preceding the date of issuance of the research report or recommendation, RedCloud Securities Incorporated has performed investment banking services or has been retained under a service advisory agreement by the issuer. Also, in the last 12 months, a partner, director, or officer of RedCloud Securities Incorporated or the analyst involved in the preparation of the research report has received compensation for the investment banking services from the issuer. And now I'm very happy to introduce to you David Stein, President and CEO of Kuya Silver.
Okay, thank you, Jacob. And we'll welcome everyone who's on the call today. Looking forward to giving everyone an overview of Kuya. Maybe it's an update for some of you if you've seen us in the past, and then answering your questions later. So let's get started. We're building a responsible high-margin silver mining company, our flagship asset in Peru. Just as I'm going over the first few slides, I will also just introduce myself quickly. I'm David Stein, President and CEO of Kuya. I founded the company a few years ago as a private company, and we just took it public a few months ago. My background is originally technical. Educated as a geologist and engineer, and then I've spent most of the last 20 years, actually pretty much all of it, in the capital markets. I've been a sell-side analyst like Jacob for many years, and then also an investment manager. So that's my background, and with that, let's dive right in to Kuya. So our flagship asset is the Bethania silver mine in Peru, and as I mentioned, we signed a deal to acquire the asset 3 years ago, and we were de-risking this as a private company until October when we took the company public, and as a private company and as an asset that's never really seen the public markets before. I felt like we were very lucky to get our hands on this asset with so much information available already, mainly because it was in production up until 2016. So very recent production. And so that gave us access to things like costs, mining costs, processing costs, the metallurgy, the infrastructure, and even a resource, which although is not 43101 compliant, was certainly something that we relied heavily on in our early days of analyzing this asset. So we entered this with a tremendous amount of information, and then we've continued to de-risk it as we've gone forward throughout the 3 years of being private, and then even more recently, we've continued to de-risk the asset. We were finally able to acquire 100%. So actually, when we went public, we were only going to acquire 80%, and then we were able to get a deal to acquire the other 20%. So, and then close it all in December. So we own 100% of this asset free and clear now. We recently engaged Mining Plus for PEA and as well the underground mine design. So they're already working on that. That's some important work that will be happening right now, and we'll finish up in the early part of this year. We are about to commence a drill program to improve our resource knowledge and help us with the mine planning. And then very importantly, right before we went public, actually, we received our EIA approval for the plant that we are looking to build. So this was a toll milling operation where the high-grade silver ore was produced from this mine for many years. We, the big factor that we see, the big opportunity, I should say, is to build our own plant, and that will help us reduce costs and expand production. And we had been working on this, the environmental permits for that for almost 2 years, I guess, prior to getting them, receiving them in August. And so that was a great accomplishment that now people don't have to worry about anymore because we've taken care of it. So with that, we've taken the company public. We did a financing back in July. We've got some great new management and shareholders that we're really proud of. But let me move on to kind of what we're doing right now and what we will be doing in the future, because that's really important. So as I mentioned before, we did the RTO, we raised money, received the EIA approval. One thing and we're about to launch our drill programs. We're basically doing all the preparation that you would do ahead of that, and that was really something where we had to wait until we had acquired the mining company. But now that that's happened, we're able to go full speed on that process. So there will be a lot of drilling happening, especially in the first quarter of this year. I mentioned before, apologize for the circle, but we've initiated the PEA on the mine expansion. More importantly, we are engaging with a number of consultants, including Mining Plus, but actually more recently, we've hired or we've engaged a firm called Visa. They're a blue chip firm based in Peru that's going to be doing the plant detailed engineering. And there's a number of other firms that we've now hired and engaged for various components of the design and project management of the plant and the expansion project. So I think, in fact, we have everyone we need now signed up for that. So there's major progress there happening right now. And then in addition, we're building the management team, and there's a number of jobs that need to be, or positions that need to be filled between now and going into production, which we're planning by the end of this year. And we will start, sort of announcing some of those on our social media. Maybe not, these aren't people that you necessarily put in a press release, but we're hiring. We're about to hire our kind of head geologist. We're about to hire our mine manager, and that will go on and on. And so if you follow us on our social media, like for example on LinkedIn, we'll definitely be announcing our hires and sort of making a point of that. That's a way that you can follow our progress beyond just waiting for press releases, and you'll be able to see maybe all of those minor details, but they're all very important in terms of putting a mine into production. So we expect to be very, very busy for the rest of this year, and towards the end of this year or perhaps early 2022, we will be commissioning our new plant and then getting into full production very quickly after that. We expect to produce at an industry low cost, and I'll talk more about that later, and continue with our exploration program. So while the first phase is focused on the near mine exploration, we'll be able to kind of step out as the year goes on and do more and more kind of exploration and resource growth type drilling. We want to grow this company. You know, we have visions to expand Bethania again beyond this first phase. We're in the process of acquiring another silver project in Ontario, I think what the big opportunity here for us and for our investors is that re-rating as we go into production later this year, early next year. Here's our current share structure. I'll just highlight that we have just under 38 million shares outstanding. We issued a bunch of shares to complete the Bethania acquisition in December. So that's where we're at right now. That's as of December 31st. Very high management ownership. That continues to be the case. I think that definitely differentiates us from many other junior mining companies out there. So the silver, before I get into some of the specifics with our project, the silver sector is a very small sector. There's only a handful of companies that are really true silver equities, where most of the value or most of the revenue is in silver and not another metal like gold. So when investors want to buy, when they're bullish on silver and they want to buy silver companies, there's only a handful of companies to choose from. And I think more importantly, what you do see is that many investors prefer companies that are in production. And that's natural because they should be making money, especially with, silver price at $25, $26 an ounce. And that's certainly much less risky than, a guy who's going out and drilling and drilling and drilling. So this is the universe. Maybe missing one or two companies here, but these are a lot of the publicly traded companies out there. And right now we're we're just under 100 million market cap. So we're kind of valued like some of these exploration companies down here that, some of which have a nice high profile, have come out, public fairly recently. But, I think certainly the upside for us is as we look to the next 12 to 18 months is getting into this kind of stratosphere here where these producers are valued. I see a tremendous opportunity to build a silver producer through these high grade silver mines. That you may be able to acquire privately. They may be spin-offs of other public companies, and really follow in the footsteps of some of the leaders in our sector, like First Majestic and even Pan American. If you go back even further, the way that these companies started is very, very similar to Kuya, and they brought sort of public market attention and capital to these underdeveloped and these underdeveloped mines in Mexico or Peru. That's exactly what we're doing. So I don't think anyone's really done this recently. However, i.e. in the last 10 years, but there's a tremendous opportunity and we're taking it, and we're very, very excited, not only with Bethania, our first asset, but with the opportunity to be a bit of a consolidator in the space. And really the secret to making a good acquisition in silver is, you find these undervalued assets. These high grade silver mines are out there. They're often in Peru or Mexico, which are the number 1 and 2 silver mining countries in the world. And by acquiring these from local owners and bringing institutional capital to them, you can essentially optimize the value. So expand the reserves and resources, increase production, lower costs. And we're doing all three of those things at Bethania right now. You benefit in silver, most companies anyway, not everyone, but most companies benefit from byproducts, which just essentially adds to your profit. And certainly our project has 4 byproducts, actually. Although we are dominantly a silver mine, we do have lead, zinc, gold, and copper. And finally, really the beauty of these, you might call them small, but these higher grade vein type deposits out there is that they're low risk, really on all aspects. So whether you look at the capital required, the environmental risks, these are under the radar projects. They don't require a lot of CapEx compared to, let's say, big open pit projects. And that is a tremendous advantage when you're trying to build a producer quickly, which is what we're doing. I'm not going to talk too much about Peru here, but this is just some of the stats about Peru. Obviously, we like being there, like to be alongside all these other major mining companies that were in Peru before we were, and sort of paved the way for the Peruvian mining industry. But more importantly, here's where we're located, and here's some of our access and infrastructure that you can see on this zoom in map. So here's Lima, the capital. It's a very big city. And then we've got this city that's fairly close to the mine called Huancayo. So you can fly there, and from there it's about a 3-hour drive to the mine. So it's easy to access the mine. You can drive there. We're in the neighborhood with other mostly lead zinc mines, some silver, some gold as well. It's a mining area at central Peru. It's very mining friendly, and it's a great place to be. Now, these are, we obviously are doing our own internal estimates. We do not have a 43-101 cost estimate for our production as of yet, but we believe we'll be a very low cost producer. And one of those, as in particular, as compared to some of the other silver mining companies in Latin America, I think we'll compare very well to them. And some of the reasons why our costs will be so low is our high grades. So our head grade historically has been 15 ounces per ton silver plus byproducts on top of that. And we expect the grades to continue to be that when we reactivate the mine. When we have our own plant, though, our recoveries will be even better. We have no royalties or streams on the project, and that goes into that gray bar on this left-hand side of the chart. So that's part of your all-in cost. So we don't have that, which is great. And then even though it's an underground mine, it's very near surface. So the haulage in and around the mine for us is very minimal. And that helps to reduce the cost, especially when you compare it to some of these deeper mines that have been operating for a lot longer than our mine. You find that some of those have very high costs because of how much transportation is going on at site. Now, even when this mine was in production, the last full year of production was 2015, because they shut it down partially through 2016. Their costs were a little over $16 an ounce back then. And this was for toll milling, and a relatively small operation that had a pretty, undesirable or crappy offtake agreement. So we are very confident that we can do much better than that by having our own plant, and we'll save costs through the treatment refining costs, lower TCRCs, through lower processing costs. Obviously, we don't have to pay for the toll milling anymore. We'll just have our own plant, and in both of those cases, both in the treatment and the processing, our recoveries will help us as well reduce costs, because we'll be essentially getting paid for more metal. And then we're also eliminating the long haul transport, because we don't have to truck the ore all over the place to have it processed. It will be done right at site. We're very excited about the exploration potential of the mine, but we already know quite a lot about it, which is a huge advantage when you're not only planning the next few years of production, but also looking beyond that, which is really what we're doing. So, in the near term, what we have is these 6 veins that have some development on them. There's a 7th vein that they started working on but never actually mined from. So there's 7 veins that are part of a sort of an internal resource, or that's the resource that was there they were working with before we got there in 2017. And it's based on thousands of samples taken underground at a number of different levels, and in 7 different veins that are all essentially parallel or subparallel to one another, very close to each other. So we know a lot about the mining area and the area that we're going to be tackling first when we reactivate the mine. Now, just so you're aware of the logistics here, the 670 level, this is the main adit that actually you can actually drive out of the mine. You can't really see it on this diagram, but in another dimension, you can drive right out of the hill on this 670 level. Now they started developing one level below, which is the 640 level. Very little development's done on that. You'll see on the next slide, but they did start producing there before they had to shut the mine down in 2016. So we've got access to the mining areas that we're going to want to start on, and obviously then we'll continue to ramp down as we go deeper. So here's the whole mining property. So this is the permitted mine at the moment, and we've got the historical resource is all in this area here, essentially underneath these 2 lower levels, right underneath the 2 lower levels of the mine. And one thing I wanted to show on this slide is that even at these bottom levels, we're still getting very spectacular high-grade silver intercepts when we sample the vein. And this, more importantly than the results themselves, this is very usual or normal for this mine and this type of a mine, frankly, that you get these high grades over narrow widths. And we're still seeing very high silver grades, even at the bottom levels of the mine. We're only 150 meters from the top of the hill here at least, where they would have started mining many years ago. So down to this lower level, the 640 level, we're about 150 meters. These vein mines, where the veins are steeply dipping, they can go hundreds and hundreds of meters or even a kilometer deep. In fact, Pan American's first mine that they started in Peru, which is still being mined today, but by another company, they're a kilometer deep now. And so we've got lots of room beneath us to explore, to increase our resources. We also are very confident that there's more resources to the east here. We have some historical workings that we know about. They're not part of the resource, but they have similar characteristics to the main Bethania mine. So we expect this will all connect up to Española Dos and then continue even going further to the east underneath the top of the hill there. So we've got lots of room to the east, which we call a long strike. And then we also have the potential at depth. So this is what, I like to see when I'm frankly looking at a project. I like to see that the exploration or the next, doubling or tripling of the resource potential is easy to see. I don't have to go out and make a new discovery, which is riskier. I just have to follow the veins and take them where they lead me. And that's what we'll be doing. Okay, we've got a great community that's been supportive of the mine. Just one community is involved in this, called the Peroche, and we've been working with them now. Really the entire time that we've been invested in this project. In particular, we were working with them very closely on the EIA process, which was mostly in 2019, where the community is actually required to approve your plans before you submit them to the government. So we were very happy to get their support there. And then now, as we're looking at reactivating the site, we're implementing new COVID-19 protocols to keep everybody safe, to keep our workers essentially separated, so there minimize the risks of any transmission if we do have it. We obviously hope that we don't, but that's how we'll be managing the site for the foreseeable future. But it really isn't going to slow us down. We just have to adapt. We did announce in December that we are acquiring through, right now we have an LOI with a company called First Cobalt to acquire some historical silver mining assets, and then also enter into a joint venture for a larger property package. And this is, an exciting kind of secondary project for us. What I liked about it was that I see the similar high-grade, small tonnage silver potential that we actually see in Peru. So although the geology is very different, the country's different, obviously, but the mining and the metallurgy, I should say, is different. But the mining actually will be very similar to what we do in Peru. So I think we can, in a way, bring some of the experience and know-how that we have in Peru, mining these narrow, high-grade veins, to Canada, to Ontario, to look at reactivating this district over the next several years. The Kerr area in particular, where we're acquiring the assets outright as opposed to the joint venture portion, is the most advanced part of this package. There's quite a lot of drilling on it, and several historical mines, about 70 million ounces when you include there's another tech mine on there that's not included in the 50 million ounces there that's on the slide. So there's actually closer to 70 million ounces in the red zones there that have been mined. And, this is an area that really has not been looked at for high-grade silver in any material way, and this is my opinion, since the last mine closed around 1989. So for 30 plus years, this area has been, there's been some sort of promoters kicking around, and obviously there was a big campaign to look for cobalt mineralization. But this is really a cobalt. This is really a silver camp, and so we're very excited to get back there and look for silver. Here's our team. I'll just, sort of summarize by saying, in addition to myself, my Christian Aramayo, co-founder down in Peru. He runs all our technical programs down in Peru, and he's got an engineering background. Some of you may know Tyson, who's in Canada here, helping on the investment side. So we've kind of got a combination of our essentially some Canadians now, and our Peruvian office that is running all the technical programs for Bethania, and so we've got a nice lean team right now, but we will be building it over the next year. And that's it. So I think we can probably turn it over for questions now.
Great, thank you, David. That was very thorough. There are a few questions from our participants, so let's dive in. The first question is asking if you feel like there might be another private placement this year, or are you funded for all of your endeavors?
So when we did our last funding, which was closed in July, that was really earmarked for the acquisition, which is now done. And it definitely, we still have, significant cash position now, which is going to help us do the exploration, drilling, resource drilling we're looking to do right now in Bethania, and the engineering and basically detailed engineering. So it should get us all the way to construction. so we have said we'll definitely look to do some sort of financing, later this year or in a few months, before we go into formal construction. We may be doing some minor jobs right now, rehabilitation and that kind of thing, but the major construction, we'll need to raise some more money for that. And, I guess we'll see what market conditions are like, but obviously we have, now that we're public, we have the opportunity for raising equity. We've got some, project debt, very interested in this project. And we also have offtake financing available to us. We produce a very attractive concentrate, or actually several attractive concentrates at the mine. So that's a kind of a sought after asset that we can potentially use for funding, maybe not the whole thing, but maybe partially. So those are the options that we have ahead of us. And I think that puts us in a very good position. The CapEx is not expected to be very, very much, sort of somewhere in the range of 15 million Canadian. So it's I guess relative to our market cap and relative to the size of our company now, it's not that material.
And just for clarity, that was 15 million for listeners.
Yeah, 15.
50. Yeah. Okay, great. Question here about Peru. I'm not sure what the participant is referring to, but they were asking if Peru has become any less friendly to miners in recent months or years.
I wouldn't say. I would say no. It's pretty much been the same for us for the last several years. Look, I think in Peru, it's a big country, and you can't treat the whole country like it's one jurisdiction from a CSR point of view and from a political point of view. It definitely can be more challenging, in particular in the extreme north and the extreme south. So near the Bolivian border and near the Ecuador border, they seem to have more challenges with communities and that kind of thing, and support for the mining industry. In the central part of Peru, in the Andes where we are, it is mining country. There are a lot of mines all over the place, and they're well supported by government and by the people in general. So so that's certainly from a CSR point of view, that's where I see it. And then politically, look, I think the politics in Peru are very fragmented, and that in a way works in our favor, because it means that it's very unlikely that there will be a drastic change in policy, either to the right or left. So even though there is an election later this year, there's like dozens of political parties, and so we're not really expecting any dramatic changes.
Yeah, that's a very good point, and I often answer the same way when I'm speaking to investors or portfolio managers. I mean, people always think of Canada as a mining country, but there's lots of different places in Canada that are less friendly to mining. Same goes in the United States. I mean, if you're in Nevada, you're in really good shape. If you're in Virginia, it might not be as easy. So I think we'll skip over the next one because we sort of taken care of that one. There's a comment here from a shareholder saying, congratulations on the listing. And when do you expect you might want to do that financing that we spoke of? I'm guessing it's, depends on market conditions, but potentially second half.
Yeah, I mean, we're probably sometime in the next several months, depending on market conditions. So, yeah. Mm-hmm.
Okay.
There's no, we're in a good position right now with the cash that we do have to get our engineering and our geological or exploration programs done. So there's no, urgency there, but obviously, we have to be smart about it if, depending on the markets.
Right. That segues very nicely into another question where someone's asking, what is your cash position? I think it's around 13 million.
Well, it was when we listed, but then we have we used a good chunk of that to finish the acquisition.
Right.
Yeah, I'm not sure we haven't updated our financials for the end of the year, but the end of the year, I mean, it's safe to say 13 million. We used about probably 5.5 million Canadian on the closing. It was about 4 million US that we owed the sellers. And then we've been running the company for the last few months, and doing other stuff. We haven't been doing any major expenditures, but if you sort of do the math there, and you probably get around 6 million, 7 million in that range. That's probably about right. But we'll have our financial results shortly.
Okay, great. There's a question here asking how much you have in reserves, and I'll let you handle that.
Sure. So we have no 43-101 resource or reserve estimate. However, I would encourage people to who are interested to look at our 43-101 technical report, and which you can download from our website or from CDAR. And we have a historical resource on the property of about 8.3 million ounces of silver. That's our pure silver, and then the byproducts are on top of that. So it's probably 11 or 12 million equivalent. Now, some of those were actually demarcated by the mine, or by the mining company that we bought, as reserves. Maybe 1.5, 2 million. I can't remember the number, but it's actually in there, and it's in the 43-101. And why they did that was because they actually have development done on some stopes and ready to mine them. And when you do that, when you're a mining company, you consider that to be a reserve. So we do have a tremendous amount of information available to us. We will be adding to that now with our own drill program, which is going to be great. And then we'll actually come out with a 43-101 of our own at the conclusion of that first phase of drilling program that we're starting right now.
Obviously, with 8 million ounces in historical resources, that gives you many, many years of life at the initial mining rate that you're proposing.
Right. So at our, we permitted 350 tons per day to start off with. So if you sort of do the math on the historical head grades, you get about 2 million ounces, or 1.82 million ounces per year of silver. So again, these are all management internal estimates, not 43-101 compliant, but that gives you about a 4-year mine life on the current resource. And then obviously we believe we can expand that materially just by drilling along strike and at depth. I talked to that slide earlier that was in the presentation that showed you where we see the resources going. And so, getting this to a longer mine life is a key, factor that we, expect to address this year. And I think also what that's going to lead us to is probably a second expansion of the Bethania mine, ultimately, in the next several years.
Right, and when you have grades in the 15, 20 and 30 ounces per ton silver, it doesn't take a lot of drilling to build up ounces. And of course, because of all the development you have underground, you could drill from underground, which is less expensive and quicker to do. Right.
Yeah, all that is true. We actually are going to start our drilling on surface. Okay. Because we can basically get access to that easier, and we can go along the whole strike of the mine more easily. However, you are right. Probably in our second phase of drilling, which would be, after the first phase, maybe around the middle of the year, we'll start going underground, I expect, and then because it'll be easier for us to reach those deeper levels from underground. So yeah, we will be transitioning to underground, but actually the first 5,000 meters that we're drilling right now, I expect that to be all on surface.
Okay, and What's the timetable on when that first phase might be completed?
It depends on how many drills we get. We're going to have a minimum of 2. So I think it'll take, probably 3 to 4 months, inclusive of the analysis, inclusive of the assaying, and hopefully the 43-101 write-up can be done in that time frame as well at the end. So that would be the rough timing of it. If we can get an extra drill, maybe we can do the drilling part of it a little quicker. We'll see.
Great. Okay. Another question here from a participant asking if you have institutional investors on your register.
We do. We've quite a few. When we did our financing in June, July of this year, the pre-RTO round, we attracted a number of institutional investors. Some of our larger investors, which actually it was on a slide. So if you go back and you look at the presentation, which you can also download this from our website, we mentioned a couple of them, Commodity Capital, Eric Sprott, as some of our larger institutional investors, but below 5%, we do have a number of other institutional investors as well. So the answer is yes.
Great. And then a question here asking about the mill site. They want to know if you're moving to an existing mill site or if you're creating the site yourselves.
Well, there's never been a mill at this property, so we will be creating a new one, but it's very interesting. You would have seen when I showed you the geology and the resources map, or the vein mineralization map, that we're on the side of a hill. And so we're actually going to put the mill on another side of the hill, so the side that doesn't have any mineralization. And so we can basically dump our ore at the top of the hill and then have it sort of cascade down the side of the hill in the various steps. So crushing, grinding at the top, and then it goes to the flotation cells sort of in the middle. And then at the bottom, basically where you dry it and turn it into you put it into the trucks for concentrate for shipment. And so the milling in the middle, crushing, grinding, then the milling, then the flotation, and then the production at the very end. So we have that set up. There's actually some cool animations of that, which you can find on our website as well, because we have designed the plant now. And by having it on the hill, the side of the hill, we actually reduce our pumping costs because some of the fluids, the water that's involved in the process, as well as the rock moving, we can use gravity to our advantage. So that's very helpful and efficient.
Right. There's a question here asking what your expected tonnage and EBITDA would be on a full year run rate, say using today's silver prices, if you have that handy.
Okay, so I mean, tonnage is we're looking to mine 350 tons per day. So you can multiply that by whatever 350, 360 to get your annual tonnage. So it's about 120,000 tons, I think, off the top of my head. And then in terms of our expected EBITDA at $25 silver, it should be around, in the neighborhood of 20 million, maybe a bit more. So what that means is that our whole CapEx will essentially pay back in less than a year, which is right. Pretty cool.
And when you say 20 million, you mean American or Canadian?
I mean American, yes, USD.
American, right. Yeah. Obviously getting paid in American.
Yeah.
Okay. When do you think starting production could begin? which I think you covered a bit, but somebody missed that. When can you get the mill built and start to produce?
Well, so we're going to the bulk of the construction part of the job will happen around the middle of this year, the middle to end of the year, and then we would hope or expect to be starting commissioning before the end of this year, but maybe very close to the end of the year. Because the tonnage is not, is relatively small. Remember, this is sort of our starter operation, and we think that we can ramp up very quickly, so like within a month or two kind of thing. So we'll go from finishing construction to full production within a few months, 2 or 3 months, I think at most. And so that would take us to, early 2022.
Okay, there's a question here asking about your consolidation plans. Are they confined to North and South America and only to silver, or would you look at other things?
That's a great question, and the answer is yes, yes to all that. So yeah, I think look, I see the best opportunities in the Americas for silver. Obviously, you have Peru, Mexico, which are great. The number 1 and number 2 silver producing countries in the world. They're both pretty decent when it comes to mining industry and risks there. And then you have Canada and the United States, both that have some silver potential in certain areas. So I would say probably not only in the Americas, but I would I'm not sure we need to leave those 4 countries, frankly. There's a lot of opportunities there. And I think if you do go beyond there, that you are taking increased risk even in the Americas, as we've seen. So that would be probably the focus. That would be our target area in terms of geography. And then yes, we're going to focus on silver. I mean, silver to me, that's where there's a big market opportunity. A number of our peers who started as silver companies have ended up pivoting into gold and produce more than 50% of their revenue comes from gold now. That's fine. And I'm sure they all have good reasons for doing that. But the problem I see there is that there's literally dozens and dozens of gold mining companies out there that you have to sort of compete with for the same capital. And differentiating yourself from investors is very difficult when there's 100 other companies that are doing the same thing. So with silver, very small group, that gives us a competitive advantage in terms of getting investment support and projects as well.
Right. Okay. There's a question here asking what the toll milling recoveries were versus your anticipated ones when you have your own plant on site.
Okay, so I'll give it the detailed answer on that. So firstly, the silver lead concentrate, the recoveries were actually very good in toll milling. They were in both lead and silver were in the low 90s. We think we can push those both up by a few percent. It's by far the most valuable product that we're going to have is the silver lead, because in addition to the silver being 60% of our value, lead is actually the second most important metal for us at the moment, based on the current metal prices. So we're starting off there. Now, where we can make improvements, the zinc concentrate was, although it's not a huge deal for us, the zinc recoveries were not great at the previous with the previous toll milling. They were getting low to mid 70s as recovery, and we think we can get closer to 80% on that. So we'll get paid more for zinc. Then finally, they did not get paid anything for the copper and the gold in the ore. Now we have we have minor copper, and we have pretty consistent gold in the ore as well. And so how we're going to tackle that is we're going to do a third concentrate. We're going to do a copper con, and we're going to get the gold going to most of the gold going to that copper con. So it will be small tonnage, but worth doing for us. It's basically like free money because otherwise it's going to go into the tailings. So we're gonna do that. And the other little trick here that we can get optimize is that about 10% of the silver in the previous operation went to the zinc con. And if you have silver going to your zinc con, you don't get paid very much for it. So we think we can get the silver going to our copper con, the silver that doesn't report to lead, which is good. Lead and silver get paid a lot for. That 10% or so, we'll get that to report to the copper con, and then we get paid basically the same for it. We get paid the high rate for that. And so that will optimize our recoveries as well.
Right. So there's a lot of moving parts, but they're going to be better.
Yeah.
Yeah.
I'm sorry, as a geo and chemistry kind of guy, I'm fascinated by all that stuff. So I apologize if that's too much detail.
Well, I'm with you there as well. There's a couple of participants asking about Dr. Quinton, if he's going to be staying on, and what, if so, what kind of role do you see him having with the company?
Well, as far as I know, he is staying on. He's our chairman. He's been appointed our chairman when we went public, and he, I mean, as a board member, I see him as being, obviously a key guy for me to be able to bounce ideas off of when it comes to, in particular, geology and exploration issues that we have. So, I mean, as we grow into a mining company, we have lots of things to think about, lots of balls in the air to juggle in terms of the expertise of the company. So we've got a really strong accountant on the board. We've got a really strong lawyer on the board. We've got a really strong CSR person on the board. We've got a really strong senior geologist, which is Quinton, on the board. As we go forward, obviously, figuring out the exploration upside and potential of new projects, as well as our own that we already own, is really important. And so I think Quinton's going to have a key role, obviously not day to day because he has his own company to run, but he has a key role as a sounding board and as someone who can contribute. He was quite involved when we did the deal with Cobalt, with First Cobalt, to help me with the due diligence with that and assess the project and the potential of that project. And frankly, I wouldn't have done it without his support. So yeah, he's going to have I think a key role going forward.
Great. Okay, I think we'll just do one more question because we're bumping up on 55 minutes here. And I'll just pick one here from a participant asking if you hit all your timelines and goals in your pipeline at present, where do you anticipate your market capitalization being, say, in 12 months?
Well, I like that question. So, I mean, one of the challenges with silver when you're in a small industry is it's really tough to find comparable companies that you can kind of stack, one-on-one with. I would say, again, and this is my opinion as a former analyst myself and an investment manager, is I think the company that I see as being most comparable to us at the moment is Aya. They are a little bit ahead of us in terms of drilling, resource definition. They're a little bit ahead of us in terms of their production process. But they've got the same type of deposit as Bethania, even though it's in Africa, Morocco, but it's essentially high-grade silver veins in the side of a hill that you can, basically add it into. So geologically, very similar. Exploration, very similar. They're just kind of a year or two ahead of us. And, they've got a $400 million market cap. We've got 100. So I like that as a goal, to get to, I think that's actually pretty realistic. That's what we'll be aiming for in the next 12 to 18 months.
Excellent. Okay. I think we'll cut it off there. And I'd like to sincerely thank you, David, for taking the time to be with us, and congratulations on the success so far. And we wish you all the best in the future. And I'd also like to thank the audience members for participating and all their questions today. That was great. I'd just like to remind our listeners that our next webinar will be with Lumina Gold Corp tomorrow at 2 p.m., which I'll be hosting, and will include Marshall Koval, who is CEO, and Scott Hicks, who is VP Corporate Development of the company. So thanks again, everybody, and please stay safe.